The 1099 rules just got a major update from the big beautiful bill.
This creator almost got it right. There's one small detail he got wrong, probably just mistakenly, and then one place where you don't be misled by what that means. My name is Paul Vázquez with Tax Lab, and you need to become an ethical millionaire. So let's take a look. So first, he's talking about the increase in the threshold for payees to contractors. This is section 70443. And right there, very simply, well, not very simply, they don't say 1099 contractors, but that's who they're talking about here. They're striking through $600 and inserting $2,000. Now, that does not mean that it's going to stay that way. So it's going to be that $2,000, but then they added an inflation adjustment where they're going to bump that up by $100 each time inflation has gone up for more than $100. So if inflation goes up by $1, then it'll go up to $100, but it won't bump up again until your inflation's gone $200 since above that $2,000 for inflation, which is very smart, right? They really should be adding inflation calculators into these rules. However, this is where the creator, he got it wrong. Let's take a look. So right here, we've got the effective date. So when does this start? Well, it starts December 30th after, right? After, get out of here, September 31st, 2025. All right. So what does that mean? That means for this year, right, all the way up till December 31st, if you pay a contractor $600 or more, you have to give them a 1099 NEC. This means this is for anybody who's been a business owner, and it's recently, not too long ago, been added in-home care, like cleaning services and in-home care, caregiving. If you're paying somebody to do those more than $600 in 2025, you got to still give them the 1099 NEC. In those two instances, business owners, or if you're a regular person and you're paying somebody to caretake or clean, all right? That is it. And then in 2026, right, January 1st, 2026, that bumps up to $2,000, and then you just kind of have to wait for inflation adjustments to kind of kick in throughout the years. Great news. What this does not cover is the payee. If you're the payor, this bumps up when you have to report. So you don't have to report until it's over $2,000 as the payee. The payor, the person who's receiving the money, you're still at $400. There's nothing in there that says that just because somebody doesn't give you a 1099 NEC, it doesn't mean that's not taxable income. You have to run it through as soon as it's $400 or more, because in this situation, you are going to be subject to self-employment tax. And that's Social Security, Medicare. You have to convince them that somehow you're exempt from paying into that system, and yet you're expecting to get Social Security and Medicare, or at least not fund those who are on it now. Good luck with that. Now, the second part of this he got absolutely right, and that is on the sellers, the online sellings, the payment collectors, the third party, PayPal and Venmo and all these guys. They're no longer going to have to worry about this $600 rule. It's back to the way it was before. So you can kind of rest easy there. They call this the de minimis. You know, if it's just every now and then, they're not going to track it. They don't have to report it. But once again, same issue, which may be a bit misleading, that's for the person who's paying. That's their rule. For the payee, it's $400 or more. you could still violate this rule. If you're found violating this rule, or if a 1099 contractor who you paid $2,000 or more for in 2026, if they do not give you the correct information, you as the person who's paying, payor, as you're the payor, the payer, yeah, you are going to have to do what they called back up withholding. So you have to collect from them 21% of the value of what you pay them, because you're going to be subject to putting that into delivering that to the IRS and states and everybody else. You're going to have to start collecting taxes on their behalf. If you don't collect the taxes, they're going to assume that you did, and you still have to pay it. That's one reason why they're sending out the 1099s, because they don't want to be paying taxes that the contractor should be responsible for. Number two, if you should pay them a 1099 and you don't, you can't honestly report that on a tax return and get the tax deduction. So once again, you're paying their taxes as the payor. If you have to pay these people and you don't follow these rules, you can't report. You're basically admitting to tax fraud at that point if you claim that deduction on your tax return but did not issue the 1099s. Right? You're admitting to be to lying on your taxes, of being fraudulent. You're going to have to either lie that you did send them out, or not claim the deduction, in which case now you're paying the taxes. You're paying somebody else's taxes. So if you're that nice, maybe I could work for you. No, I wouldn't encourage anybody to break the rules on my behalf, and I hope you don't make your business contingent that somebody break the rules for you. That is not a very smart way of going about it, because once that stack of cards falls, everybody's getting beat up. You don't want to be a part of that stack of cards. Just follow the rules. There's plenty of ways in the tax code to by the rules and still save on taxes. Paul Vázquez with Tax Lab. Go to taxlab.tax and click on Advisory Services for your free 15-minute introductory phone call or video chat, and we'll see if our services are right for you, or if you're right for us. There are plenty of people who we find out you're not so ethical, you're not wanting to play by the rules, and guess what? You're too high risk. We don't want you as a client if you're committed to trying to break the rules or skimp around the rules. And we don't report people, but we don't help you break the law or the rules either. There's plenty of stuff within the rules, so it's really easier to play by the rules. You have more benefits, more avenues of wealth generation being in the rules than being out the rules. Once again, the tax code, they fight over it. All the wealthy people, the IRS sees money, they go after it. The wealthy people say, don't take all our money, let's create some rules so that way you can get your money and we can still, make some money along the way. So it's some back and forth on that. Either you play the game and win, or you don't play the game and maybe you win, but maybe you also lose. All right. I wish you guys all the success.